Hi guys, welcome back to another weekly video. Kayong here from Alpha Play Chief Currency Strategies. Last week we were invited to share with some of the traders, alright, a group of traders about the 2017 market outlook. Alright, we shared much about the geopolitical as well as the fundamental economic outlook for 2017, especially the first half of the year, as well as some of the technical analysis and the potential setup going into it. Right, so these setups are all huge potential profits that you can take, and of course the horizon will be of a longer period, right? Because we are looking at first half of the year, or even it can stretch towards August-September period. But this kind of trades that I'm going to share with you in this video as well can go up to 1,000, 2,000 pips, or even more. Alright, so what I want to share with you is do not miss this kind of big move. And 2017 will be the year that it might happen, simply because for the past 2 to 3 years, market has been consolidating. Alright, some of the pairs has been ranging in a correction mode, and this year itself might be the year that it will move strongly in a trend. Alright, and as a trader, you do not want to miss that. Alright, so a quick disclaimer before all sharing of the potential ideas are really educational basis. So if you do not have a proper plan, alright, you do not have a proper risk management, my suggestion to you is to go and learn it first before looking at these trades and then just follow blindly. Okay, because these are all just to share with you our insight and our view and analysis into it. Alright, so let me share with you a little bit about the techniques and some of the recent trades that we have shared with our traders. Okay, so if you have followed us on Pound Yen, alright, if you're one of our subscribers, you have followed us on Pound Yen, alright, we shared with the traders on the 15th of December that potential setups around 148.2, right, will be very decent to look for short. Alright, and from there, right, from 15th of December to today, okay, this is done on 12th of January, you will see that price has indeed reached the 140 level, right, which I shared with many of the traders that you might want to take profit off the 140.15, right? And of course along the way you can scale in or even take some partial profits, but if you just take one trade at 148.20 and on 12th of January, right, you take profit at 140, it's actually more than 800 pips. Alright, so these are the move that we are looking for in the market. Right, another one that if you have followed us since last year, okay, you would have also know that we have been looking out for this trade. And on 20th of December, alright, we were saying that look for buy setup around the 1.0350 area. Right, because once this structure is complete, we expect a move up very strongly. And since 12th of to 12th of January, okay, it has moved more than 200 pips. But of course, this is one that I'm going to share with you more later on in this video. Okay, because this movement is definitely, we are targeting more than 200 pips, but we're just showing you that for the short 1 month or even less than that, right, price has moved in the direction that we've projected. And if you are not in yet, you definitely still have a lot of opportunities that you capture, especially for this pair itself. Right, another one that I want to share with you is using this forecasting methodology, we are even able to caution some of our traders who are with us, alright, not to take certain trade because we are projecting that it's gonna turn. Alright, the down move is very limited. Alright, so on 20th of December, we actually cautioned them for shorting and instead looking for long opportunity around the 68.50. And as of 12th of January, alright, today I believe that the Kiwi dollar is even higher. But as of today, you can see that the price has reached 0.7070. Right, that's more than 200 pips move as well. Alright, another example, this one was very recent, which is only this year. Okay, some traders caught this, which we shout out that look for short opportunities targeting the 4225. Right, we shared this on 8th of January and shorted it at 1.4410. Right, so very shortly in less than a week, alright, price has hit the target at 1.4210. That's about 200 pips. Right, and of course the most recent one is dollar franc. Right, this was indeed one day before the sharing that we did with this group of traders. We shared that look for short opportunities up around the 1.0215 to 1.0220. Alright, we shorted at 1.0215 and we took profit of the 1.0045. Alright, so that's another about 170 pips. Alright, so I just want to share with you that this methodology it's really powerful in forecasting the direction of price going, and moving whichever direction it is, and where it's highly gonna terminate. Alright, so we are gonna use this methodology to share with you some of the huge potential trades that you can take in 2017 as well. Alright, so let's go over to the chart to share with you some of the potential setups. Alright, but before that, I'll just quickly show you this screenshot, alright, of the total 11 pairs that we are actually monitoring. Okay, so the first one is actually dollar index. This is definitely going to be interesting because with Donald Trump and the Fed, right, Yellen actually stating that there will be 3 potential rate hikes in 2017. It's interesting to look for dollar index as well. Alright, so look for long opportunities around the 99.50 to 101.05. I'll show you the chart to explain this more. Gold, we are also looking for long opportunities. Oil, we are also looking for long opportunities. For the pound dollar, right, with Brexit coming into 2017, I would say that a lot of traders will be looking for short, but I would like to just be cautious, caution you guys who are still heavily shorting the pound, right, because the potential termination area on pound dollar will probably end around 1.15 to 1.16. Right, from current price to there, you do still have some opportunities that you catch, but we are not looking for this kind of small room for price to move. Alright, we are looking for more than 1,000, 2,000 pips in the market. Alright, when we talk about potential trade for the year, dollar yen, alright, looking for short opportunities. And for Aussie dollar, Kiwi dollar, we are looking for long. Dollar CAD, we are looking for short. Aussie Kiwi, Euro Aussie, and Euro Kiwi, we are all looking for long opportunities. Alright. Do not worry about orders because later I'll put this in the description below in the video as well. But let me bring you over to the chart, right, to share with you exactly what we are looking out for. Okay, so the first one is dollar index. Right, I'll show you on the daily perspective. This is more than enough. Right now, dollar is definitely still in a correction mode. Right, we expect it to enter this region highlighted in grey over here. Right, between 99.50 to 101.05. This is where we'll be looking for the correction to terminate, to end, right, and one last move towards 106.20. Right, so if you manage to capture dollar, a long potential right below here, it'll be a very decent, as in lower your risk. Alright, it's a very low risk trade that you can target up to 106.20. Right, after that, we do expect the dollar to correct from there. Right, the other one that I want to show you is gold. Alright, so for gold, if we look into the weekly time frame, alright, this is what I'm looking out for. Alright, we are looking for it to target at least the 1465. Alright, after this completion in the correction itself. Alright, so on the daily perspective, right, this is what's happening. Okay, it has a very strong move and then you can see a very strong rebound. Okay, so this down move is rejected off a very strong rebound. So very high potential that price is gonna reach there in this year itself. Alright, so but as of now, right, it's not a very good opportunity to long it, okay, because we do expect some form of correction after this strong up move. Okay, so we expect one more down towards the 1116 to 1120 area, right, for a long opportunity, and then you can really ride this gold trade off all the way until 1465. Okay, so this is again a huge move. If you manage to capture some trades at the bottom, alright, scale it up. That means scale it in. That means whenever price move in your favor, you can decide to add position according to your strategy. Remove certain risks by taking partial profit, shift your stop loss, and etc. Alright, manage those trades. You do not need to take a lot, but if you manage to capture one like this in a year, you can easily gather 50% return or even double your account by that. Right, and of course oil. Okay, oil, this is what's happening on a daily perspective. Alright, it has broken above this structure. So we expect it to move up to at least 58.60, but as of now, it's probably not the best time to enter because we are still expecting some form of retracement. Alright, back towards around the 48.60 to 49.86. Alright, so this was done last week, but as of now we expect one more move down over here, right, below towards this area, right, below this structure low here, to complete this correction, and then we can expect one more move up towards 58. Sorry, not 58. Yes, 58.60. Okay, so oil, we are bullish for the first half of 2017, and we are looking for long opportunities should price comes down towards the 48.60 to 49.80. Right, around this region, we'll be looking for a long opportunity targeting 58.60. Alright, for pound, we are not looking for much opportunity to short right now, simply because we expect the down move to be pretty limited. You can see this down move is huge already, right? And of course, this downside here from 1.2145, you can still capture is about, if I'm not wrong, let me do a quick calculation, that's about 600 pips, right? It's still a decent trade to the short side, okay? But because we are looking at other opportunities that are easier to trade and it's more matured, meaning the move might occur more obvious, alright, to us traders. So that's why I would just say and caution you guys who are really actively heavily shorting in pound dollar to just avoid or even, you know, minimize certain risks if possible. Alright, dollar yen, this is what I'm looking out for. You can see that on a weekly time frame, okay, this is a very strong up move, alright, since end of 2011 or beginning of 2012. Okay, so since the QE program from BOJ, you can see that dollar yen has moved very strongly towards the upside. Okay, up to 2015 June, and since then it has been correcting towards the downside. Alright, up to June 2016, so that's 1 year of correction towards the downside, and then you can see that now since 2016 June to late last year, right, dollar yen has rallied up very strongly as well. So right now we are expecting this one more down move towards the downside, okay, and this down move here can go as low as 91.35. Okay, but what is the needed catalyst to push dollar yen down? Alright, you need a very strong Japanese yen. Okay, fundamentally, and even looking at the BOJ, what they are proposing, you know, what they are doing right now in the market, definitely is not going to strengthen the Japanese yen that much. Alright, so this catalyst over here, what we are expecting is perhaps a very strong risk-off environment. Alright, so it can come from a war. Alright, we never know what's going to happen, or it can come from an economic recession in 2017. Okay, so a lot of economies are actually discussing and talking about a potential recession in the market in 2017. Right, so that might be a risk-off environment, right, to push the Japanese yen very strong and dollar yen down. Alright, so again, it's a very decent move because right now you're at 114.4. Alright, if you are able to look for a short opportunity targeting around, you know, 191.35, that would be a decent trade. Alright, Aussie and Kiwi, I'll just go through one pair, okay, because they are sisters pair, they're very similar. Alright, so Aussie dollar, this is what I'm looking out at. Right, this down move, which is very strong. Okay, I need to scale up even more. Alright, started somewhere around here in 2013 April. Alright, this down move all the way until 2016, the beginning of 2016 is actually a downtrend. Alright, it's a trend environment. Okay, since 2016 to the entire 2016, in fact, right, it's actually in a range environment. You can see over here. Okay, and this is actually a correction. Right, it's a corrective phase, and what we expect is it move in 3, alright, 1, 2, 3, alright, so we expect one more up towards the 0.81 to complete the correction before another strong down move. Alright, and if you look at this, price might have started to move up towards the 81.50, alright, but do not jump into trade if you miss any opportunity, because we expect very high chance that it can still come down first, touch the 0.60, alright, tag that price level, and then only it goes up. Okay, so be patient, look for long opportunity on Aussie dollar, alright, potentially reaching at 81.05. Okay, so that's again another more than 1,000 plus pips movement that if you catch it, it'll be very decent trade. Kiwi dollar is pretty the same, alright, so I won't go through much in depth, but we are also looking at one more up. alright, to complete that correction. Right, so very similar to Aussie. You can see this is a very trend environment, and then this is currently in a correction, targeting to complete at 0.7835. Okay, so if you manage to catch that, again, very decent trade. Okay, very similar. Okay, dollar Canadian. This one, for our traders who have been following us sometime, you know that we have been sharing you guys about short opportunity. Alright, we expect it to come back up here first, but you can see that this entire structure has been broken pretty strongly. Okay, so right now we do see that price might indeed already start to drop towards the 1.1860. Right, even though it didn't come up here to give you that very nice opportunity to short, if you manage to catch somewhere around here, right, after a decent correction, and you manage to catch a short opportunity, right, giving you around maybe 1.32, and you manage to ride it all the way to 1.18, that's still more than 1,000 plus pip movement. Okay, you want to catch those kind of move. Right, and some traders might be concerned, how long do I need to hold a trade to capture this kind of 1,000 plus to 2,000 pips of move? Right, let me give you some perspective. Okay, if you look at this top over here, right, it started in 2016, right, January, and it went all the way very strongly towards downside. Alright, and that's about 5 months, because it ended around 2015, around May area. Right, so imagine you map this. Right, so let me give you a perspective of what I mean. Let's do this. Alright, if I map this over here, okay, and I bring it towards this area, okay, let's just say it did went up here. Alright, but if it didn't, alright, maybe it starts somewhere around here. Right, so this similar movement, if I just map it over here, alright, this entire move from about 1.32 down to 1.18 can take, you know, maybe if it starts now, okay, in January 2017, it can really complete by April, mid-April, or even May 2017. Okay, so it's about 5 months. If you are able to capture 1,200 pips in 5 months, that is very decent, right? And I'm just talking about one trade. Imagine you are able to scale it in, alright, as trade move in your direction, right? You add some position, take some partial profits off your table, right? That's very decent, okay? And you do not need to hold more than a year, because all these trades that we are sharing with you today in this video, right, is the first half, or even, you know, if it is gonna last, it's probably gonna take you up to maybe August or September period, right? It's all gonna happen in 2017 itself. Right, so this is a dollar Canadian for you. Right, let's move to the last 3 pairs. Alright, Aussie Kiwi, another interesting one. Alright, we are targeting it to go as high as 1.0905 or even higher, breaking this. Alright, on a weekly perspective, we can expect it to even break above this structure all the way up there at 1.18. Alright, so it's huge. Right, but of course now is not the right time to jump into it. Alright, wait for this correction. This has definitely broken above the structure. I bring you to the lower time frame to look at it. Alright, it has definitely broken that structure over here. Alright, it has moved up, correct, and then move another up. Alright, right now it's in a correction. Okay, so wait for this correction to be done. Okay, and then you can enter based on whatever strategies that you have. Look for that trade all the way back up. Alright, that we share over here. Alright, first target at 1.0950, and if you are those who are more patient, alright, and want to go for a bigger trade potential, you can ride for it even higher. Okay, how long this is gonna take again, if I just map this out for you, alright, this one over here, and I just map this over here, you can see that this can take as fast as starting of 2017, and you can reach up here as fast as within a month. Okay, so be patient. Alright, look out for this kind of trade. Okay, this is Aussie Kiwi. You do not want to miss that as well. Euro Aussie, Euro Kiwi. That's the trade that you do not want to miss. Alright, let me show you on a weekly perspective. It's very clear what's happening over here. This up move, alright, is definitely a trend environment. This entire move here is definitely a correction, right? So this correction has happened since August 2015 all the way until last year, okay, and it's gonna complete soon, right? Because once it tapped the 1.4 or even around this region right now, right, that's where we expect this correction to end, and this is gonna go up towards 1.735. Okay, how long it's gonna take? Again, if I bring you this perspective, I map it over here. right? It can take as fast as starting in Feb, let's say, right, and it can complete around July. Okay, so that's about 5 months period. So for 5 months, you are able to capture this kind of movement from 1.4, to 1.735. That's about 3,000 plus pip. All right, you do not want to miss this. Okay, showing you very similar Euro Kiwi. Look at this. Okay, this is definitely a very strong trend. This entire move here is a correction, and if I map this out for you, all right, I just put it over here. If this completes, right, this move again very similar. It can start in Feb, right, as soon as in February, and it can end as fast as June. Okay, so that's again 4 months to capture some movement from 1.4405 around this area all the way to 97, 1.979. Right, that's close to 5,000 pips. Don't miss those kind of opportunity. Okay, but of course, sharing with you in this video is a huge movement, alright, projecting the direction that price is gonna move, but you need your own strategy, right, to tackle this kind of trade, because you cannot just enter right now and then expect price to straight away move up. You need certain reason, be it technical, be it fundamental, to give you that reason to take a trade, right? And then of course, how you're gonna manage your risk, where you're gonna put your stop loss. You need those kinds to engage this kind of trade. Alright, so this kind of catalyst, weakening of Aussie, weakening of Kiwi, alright, and strengthening of Euro for these two pairs. What can be the potential catalyst in 2017? One is perhaps, right, the Eurozone, right, with all the election from coming from France, coming from Holland, right. If there's not much shake in the market, alright, basically talking about French exiting the Eurozone, or even Holland exiting the Eurozone is now no longer the risk for Euro, right? We might see that rally, right? That might be one of the catalysts. Right, and another catalyst is the weakening of Aussie and Kiwi. This can come from a risk-off environment as well, right? Very similar to the Japanese yen that I shared with you earlier. Right, if there's a war breakout, or going into this year, we also have the New Zealand election. Okay, so all this can be catalysts to move this pair. Right? So pay attention in the market. Do not miss the big picture as you trade into 2017 this year. Alright, so it's a pretty lengthy video, but I thought it's very important and interesting to share with you some of our insights into what are some of the big trades that we can take in this year. Alright, but if you have any questions, feel free to drop it in this video below. Alright, and for those who are interested to learn about wave theory, or Elliott wave especially, alright, and how we use this methodology to forecast with such accuracy and precision, right? We do have a class coming up, right? You just go over to alphaplay.com.sg, key in Elliott wave, alright, and then you'll be landing on this page itself, alright. You can read a little bit about what Elliott wave is, alright. But we do have an upcoming masterclass, right? It will be our first intake on the 25th of February from 10 to 6. This is the one-day intensive workshop where we will share with you everything you need to know, right, in terms of the knowledge, the understanding of Elliott wave analysis, giving you some practice as well. But more importantly is you also you need to attend the practical session on the 28th of February, alright, from 7 to 10 p.m. This is a live market environment, right, where you will be given some homework, alright, and then our coaches will then be reviewing your analysis with you in a live market environment, right? So basically you can read more about this masterclass, alright, some FAQ as well, alright. So our usual price will be marketed at 697. Alright, but for our first intake, alright, basically this is first intake is the 25th of Feb one. Alright, the first intake we're giving off a 20% discount. Alright, so if you are interested, alright, do sign up ASAP because we do have limited seat. We are going at 497. Alright, so this is a one-time investment. Basically, everything you need to know about Elliott wave will be taught to you in this masterclass. Right, so other than that, if you're interested, alright, just fill in your details and then click on to enrolled, and then the venue will be confirmed with you again. And just to quickly remind all, right, this masterclass will be conducted in Singapore, right? So if you're overseas and you're really keen to join this you have to come down to Singapore, alright? We will be doing an online version of this, but not so soon, right? We'll be focusing more on the physical class as of now. Alright, other than that, wishing all a very good year ahead, alright? Again, reminder, always manage your risks, right? Do not just hop onto a trade just because we tell you that it can go that direction. You need to have a proper strategy, proper risk management to take and engage a certain trade. Alright, with that, I'll talk to you next week again, alright? And have a great week. See ya.